All right, welcome back to Trading Options Network. Just want to say thank you again for tuning in. Let's go ahead and get this disclaimer out of the way. Keep in mind that everything we discuss today is solely my opinion. It's not the opinion of Trading Options Network. But boy, oh boy, do I have some opinions today. I'm going to go ahead and get right into it. I already have this kind of set up. One of the reasons I have this set up, this is kind of funny. I just went through my entire training and I did not have my mic on. So I'm essentially having to do it again. That being said, I made sure my mic is working now. We are good to go. So I'm going to go ahead and I'm going to click on the 1 minute candlesticks here because I want to show you what happens when Jerome Powell speaks. He started talking around 1:30. At that time, the market completely seemed like it was going to hell. But, like always, whenever he opens his mouth, we expect to see some volatility in both directions. So as quickly as it fell, it almost came right back just as quickly. And then it decided to go back down again. And then it shot up real high for the day anyways. And after that, it was like, just kidding. I'm really, bearish. And now it looks like we're going back up to basically be where we were before he even opened his mouth. I'm not surprised. And to me, this is actually kind of funny. Now, if you're a day trader, when I say day trader, I mean you're specifically holding trades for, a few minutes. These are massive moves. But anytime Powell's talking, in my opinion, and you're making trades based on what you think he's going to say, you are gambling, okay? You have no idea what he's going to say. You don't even know how the market is going to react to what he says. He may actually say exactly what you're thinking, but the market may react completely opposite of the way you would expect the market to react based on what he says. So, as a swing trader or a long-term trader, we really don't care too much about what he says. Okay. Truth is, I'll come back. I'll look at some news and find out exactly what he said later to see if I do feel like it's going to have any effect on me. But for now, all I'm seeing is some volatility because he opened his mouth. Now, that being said, let's go back and get to the daily chart. All right, what are we seeing here? Yes, Powell opened his mouth has caused some volatility, hence why we see some long wicks on this candle. But the interesting thing about this is that if we finish here, let's see, we have about an hour and 20 minutes left until the market closes. If we finish at this point, right around 5:04, we can consider this a doji. And in all reality, it's very close to being 50-50 what happens tomorrow. The market can be like, hey, based on what Powell said, we really like it, and people come back and start buying again. Or it could be like, Powell wasn't very, bullish, but even though he wasn't very bearish, I still don't have a lot of, hope in the market right now. So it just continues to sell off tomorrow. Look at that. Now it's really closing in on being a true doji. Okay. The market opened today at what? 504.93. Okay. So we're within that dollar. It's not much. 0.08%. But anyways. Oh, I'm sorry. Yeah, this is the daily. Yeah, this is the daily chart. So yeah, 504.93. Okay. Another thing I want to look at, I didn't actually discuss it much yesterday, is the volume from yesterday. Even though we had that big old nasty red candle, the volume wasn't anything crazy. In fact, I would say it's pretty much average, maybe slightly above average if we kind of move it down here just a little bit. But the volume yesterday, I would say, is pretty close to, again, just being average or maybe slightly above average. Why is that important? Well, if we had massive volume yesterday with this big nasty red candle, then that would signify a huge sell-off. With average volume, or again, slightly above average volume in this big red candle, that tells me that was just maybe a 1 day thing. Okay. Little hiccup going, and maybe the end of this little retracement, who knows? And especially with this doji, if we finish as a doji today, meaning the market's not going to finish clearly in either direction, then I think we have a relatively decent chance of having a green day tomorrow, or maybe the next couple of days. But that being said, I'm actually going to go ahead and get rid of the 9 day here. I don't need the 9 day. I don't want it to be confusing. Oops. Let me go ahead and save it. All right. There we go. Let's go ahead and zoom back in. All right. So I'm looking at the 20 and the 50 day. As you can see, the 20 day has already flattened out, and you could even argue is starting to move in the downward direction. The 50 day, it seems like it is getting close to flattening out. And if we don't have much of a movement in the up direction, if this just goes neutral for a couple days, or especially if it goes down the next couple of days, we should expect to see the 50 day to start moving. But I think I would personally start worrying about going into a more of a bear market for at least a short period of time when the 20 day crosses the 50. Now, again, who knows what happens tomorrow? We might have a nice green day that completely erases this red day, and now the 20 day is no chance of even touching the 50. But if we're going sideways for maybe a week or two, or have a little bit more of a retracement, and that 20 day starts getting to threatening the crossing of the 50 day moving average, then I think we might be transitioning into more of a bearish market. Okay, we've been in a bull market for quite some time, as I mentioned yesterday. So to have such a run like this, and I can even go back even further. Boom, there we go. Look at that. I mean, literally since November, it's been nothing but going up, up since actually technically late October. Okay. So, 6 months basically, the better part of 6 months. We need a retracement. A retracement would not be a bad thing. Excuse me. It would actually be healthy. So what I'm going to be looking at for the next couple of days is, again, I mentioned it yesterday, I want to see some confirmation of this big red nasty candle that tells me that, yes, we are indeed going to have a little bit of a retracement. I mentioned yesterday, I think we can go down to around the 480 mark, in that general ballpark. But I don't have a crystal ball. It could very easily come down to 480 and then continue to plummet. Tomorrow it could be like, this was retracement enough. And then the market just comes back and be like, hey, let's just go ahead and get to new all-time highs, 540. Boom, let's get up there. And it just takes off. I don't know. But regardless, if I see one more red candle, one or two more red candles, and again, that 20 day starts threatening the crossing of the 50 day, I'm going to be looking at creating more of a bearish portfolio. Right now, I'm holding actually a lot of cash. I am, let's see, if I do the math really quick, I think I'm at like over 95% cash right now, because the market could go either direction. Now, am I always holding 95% cash? No, it's actually very rare. It's usually in these times and instances when I'm holding more cash than anything is when it looks like we are starting to change our sentiment. Okay, the market is trying to change sentiment. And again, that's exactly what it looks like it's doing. So until I get confirmation of whether or not it wants to actually change, or it's just taking a little bit of a break and then it's going to start going up, again, I'm going to be holding cash. Now, one thing I did mention yesterday, I'm going to go ahead and go over here to Screener really quick, and I'm going to click on the sectors. I have it saved. Let's see here. Where is it? Oop, that's not it. There we go. Why did it do that? Bear with me here. I'm not sure why it's doing this. All right. There we go. That's what I wanted. All right. So I wanted to talk a little bit more about each sector. Okay. Obviously, the technology sector is the biggest sector. So I'm going to go ahead and click on it really quick. The technology sector being the biggest sector, you can clearly see that it's basically had the exact same chart as the S&P as a whole. Okay. Basically, since the end of October, it has been nothing but bullish for the most part, with the exception maybe of this week here and maybe that week there and that week there. It's been pretty bullish. Okay. Yesterday had that big red nasty candle, and today it is looking to be a doji. Okay. So who knows what happens moving forward, you know? Let's go ahead and go back. Let's look at a different one. Maybe the energy sector. The energy sector is an interesting one as well, because as you can see, even though the market as a whole was becoming more bullish than bearish in late November, this one was actually delayed about, almost 2 months before, well, heck, even 3 months before it actually started moving up. Okay. So just because the market is doing something does not mean every sector is going to be following. Okay. Every sector, for lack of a better term, is its own little, well, not for lack of a better term, it really is its own ETF. Okay. Real estate, consumer staples. Real estate has been pretty flat for a while, and let's see, it peaked in mid-December, it looks like, and then it started going down, came back a little bit here at the beginning of March, and since then it's been going down. I would not be surprised, just looking at this particular chart, if we came down to this 30, we'll call it 35. You can call it 35 pretty easily. So maybe another $1.50 or so. And who knows where it would go from there if it does in fact go down to 35. But that being said, why am I bringing this up? I can look at, let's see if I go back to the screener. I can open up the real estate sector, and I can look at all these different real estate stocks. Okay. There are 266 of them right now. If I can find a particular stock that is more bearish than bullish, in fact, let's go ahead and give a few more filters here. I want it to be over $10. Optionable, because again, I trade options. Want decent volume. Let's see, over 2 million. I still have 36 possible stocks to look at. So let's see one that is a relatively well-known Blackstone. The Blackstone Mortgage Trust. I know this one's pretty well-known. Okay. So if I'm taking a look at this, it looks like we are at the lows of quite some time. Let's see if I go back a little bit further. So the lows in the last couple of years are around $17. Okay. Right now we're sitting at about $18. And it looks to me like this is threatening to break recent lows as well. Okay. We'll see what happens. But if in fact this does break recent lows right over here of about $18, or only a few cents away from that, I would not be surprised for this to drop to $17. So this, because the overall sector is pretty weak, and I look at the stock and the stock is pretty weak itself, this would be something, although I do see now here that has earnings in a couple days, so I may in fact actually stay away from it. But if this earnings was not scheduled for, a couple days from now, I might try and play this something to the downside. Let's see if I can find another one. Let's see. I'm not really seeing too many that are, it's the real estate industry. There's not a lot of huge, well-known companies that make up this sector. Crown Castle is one, though. And boy, oh boy, In fact, I actually recently had a bearish position on this, and I actually sold right around 100. Man, I wish I still had it. I actually sold on this green day here because I had set a limit that day. A stop order that day. If it got to a certain point that it would sell. So I did end up selling on this green day right here. And then go figure, it just continues to go down further. But you know what? I was already relatively profitable. Again, I don't hold my trades for that long. So I was happy when I sold it for a profit here. But that being said, this one literally has no end in sight. You can argue that if we go back to about 6 months ago, a little over 6 months ago, it is right at about that support level. But if it breaks this, and it very well could, if it breaks this, with the real estate sector as a whole being pretty bearish, this could easily go down to 85 where it was last October. Easily. So again, this might be a potential stock to get a bearish position in. Let's see here. Let's see. What about if I come back? All right. Bum, 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 bum. Yeah. Oh, gosh, looking through these, and I will definitely say I really do feel like a retracement is going to be happening. In which case, again, I will be more bearish than bullish. But again, time will tell. All right. So this is the industrial sector, XLI. You can argue that this one's the most bullish. It doesn't necessarily mean it is bullish, but has still not broken the 50-day moving average. So if this does turn green, I could potentially look for a setup in the industrial sector that I could play on the bullish side or to the upside. So if I'm going to go ahead, let's go back to screener. Let's look at the industrial sector. Let's see if we can find, let's go ahead and again, over $10. Average volume over 2 million. Again, I want it to be optionable. There's 38 options. Okay. American Airlines, I haven't actually looked at this. I know the airlines have been pretty volatile recently. I want to say they've been more bearish than bullish, but let's take a look. Yeah, more bearish than bullish for sure. So this is not something, even though the industrial sector is the one that has some strength still in it, or the most strength anyways, I would not do a bullish trade on American Airlines because this is still showing weakness. Same for Boeing, I think. Yeah, Boeing's been getting the crap beat out of it. Caterpillar, let's take a look. Yeah, there we go. This one, on the other hand, this looks like a pretty healthy retracement. Okay, still well above the 50. Maybe we did cross the 20. Sure, I get that. But based on the chart here, oops, there we go. Today it went down and came right back up. So if tomorrow's green, especially if it goes back over that 20-day moving average, I think this could be a good contender for a bull trade. Now, that being said, this big E is here. So we have earnings coming up on the 25th. So that gives you 9 days. Okay. Was that next Friday? Did it say the actual day? No, I think that's the Friday though. But nonetheless, on the 25th, we have earnings. So for me, I would be out of this trade before earnings. I do not like trading earnings because God only knows what's going to happen to a stock on earnings. I don't care if the stock has been looking great. It could fall off the face of the earth. Same on the flip side. It could be going down, 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 down. And we have, boom, earnings is actually somewhat good. And it can jump 20, 30, 40%. It happens all the time. So again, unless I want to actually play a gamble, have a gamble trade going, if I were to open up a trade on this, if it is green tomorrow, I will absolutely be out of the trade before the, the 25th, right? Yeah. So anyways, for everyone that did go ahead and tune in, I hope you guys learned some stuff. Oh, you know what? I did have a question that I wanted to answer. Let's go ahead and pull it up really quick. Okay, so it was a pretty simple question. How do you determine the best delta for a trade? Now, I haven't talked about delta yesterday or today, but delta is one of the Greeks. I look at delta a couple different ways. The first is delta is going to be anywhere from -1 to +1, by the way. You're typically going to see a negative delta if you're looking at puts and a positive delta if you're looking at calls. However, I look at delta as the approximate, what's the right word? The percent chance, I guess you could say, that a trade will ultimately be profitable. Okay. Or I shouldn't say profitable, but in the money. So if I'm looking at a call or a play at all, it doesn't even have to be a call. It could be anything. I typically look to be at about a 0.70 delta, or if I'm looking at puts, a negative 0.70 delta. That tells me that I should still have about a 70% chance to finish in the money. Now, in the money does not mean profitable. Okay. I can very easily lose money, but the option can still be in the money. Okay. I guess for lack of a better term, I would say it is about a 70% chance that I will not at least lose 100% of my trade. Now, the true definition of delta is it's the value that you should expect an option premium to move for every $1 the stock price moves. So if you have a 0.70 delta and the stock moves $1 in either direction, by the way, you should expect to see the premium of that option move either up 70 cents or down 70 cents. Now, there are other Greeks out there that will have a little bit of a say in that as well. So it's never going to be an exact science. Okay. For example, theta. Theta is another very popular Greek. But again, for all intents and purposes, if you have a 70 delta, or a 0.70 delta, and the stock moves $1, you should see about a 70-cent change in the premium. On the flip side, okay. Actually, no, I'm sorry. I'm combining two things in my head now. I'm overthinking things, which is something that people could do in this industry very, very quickly. But again, to answer the question, that's what I was going to say. How do you determine the best delta for a trade? I can't answer that because everybody has a different trading style. Some people that are day traders, they don't care if it's a very high delta or a very low delta because, again, they're only holding the stock for, seconds or minutes or maybe an hour at the most at a time. So they're not necessarily looking for those, a good delta. When I say good, again, as a swing trader, I'm looking at about a 0.70 delta personally. They just want the stock to move in their direction. Okay. But other people, they may want to find a stock that has like a 0.95 or greater delta. So I actually have this pulled up right now. This is a paper trading account, so I believe it is 15 minutes behind. I think that's how Thinkorswim does it. It's 15 minutes behind. But right now, actually, let's compare it. It says 504.23, 33. Oops, wrong one. All right. Oh gosh, 505.70. So, again, these days that Powell talks, man, these stocks will move like crazy. All right, so we're actually positive 0.25% now. We just looked at it, a minute ago we were down, or a few minutes ago anyways. We were still down almost 0.25%. Anyways, getting back over to here. So yes, we are about 15 minutes behind, I believe. But that being said, if I wanted to be more bullish, okay, I'm going to go ahead and look. These are some of my Greeks, delta, gamma, theta, vega, some of my Greeks. Maybe I like seeing a 0.95 delta in order to open up a trade. So That would be 417. Now, why would I want to buy a contract that is literally $88 in the money? Okay? $88 in the money. Well, think about it. If I just round down to $500, it would cost me $50,000 to buy 100 shares of the S&P ETF, SPY. It cost me $50,000. In this case, in reality, about $50,500 if we're at 505. However, and as you can see, the deltas keep changing on me as long as the stock price itself keeps changing. If I'm looking at the what did I say before? I can't even remember now. We'll just say the 415. 415 is close enough. It's 0.94. Okay. If I wanted to buy this contract, this would only cost me $9,400, meaning it's literally more than 80% less than the cost of 100 shares. However, I would profit almost as much as if I actually bought those 100 shares. So that's why some people will actually prefer those really, really far in the money contracts, because they have a higher delta. So for almost every single dollar it moves, they earn almost that full dollar themselves, but with only having to invest 20% of the actual amount that it would take to invest in 100 shares of SPY in this example. So again, to answer the actual question, how do you determine the best delta for a trade? You really don't. It just depends on your trading style. For me, as a swing trader, I'm looking at about 0.70. Again, for really, really short-term traders, less than a day, especially less than an hour, they really don't care. They will actually just determine, how much money they want to spend for a contract, and hope that their stock moves in the right direction in those few minutes that they plan on holding it, and profit that way. Because even if you get a contract that costs a quarter and it's far out of the money, and the delta is only a 0.10, well, going from a quarter to 35 cents, well, actually, let's go ahead and let's say the delta is 0.12, and it moves $2. Okay. Well, $2 on a $500 stock is not a huge amount, but when you only pay 25 cents and it essentially goes up another 25 cents, you literally have doubled your money, even though the delta itself was only like a 0.12. So short-term traders, delta is not a huge worry or huge concern. Long-term traders, I'd say the longer you plan on holding a contract, the higher you want to see the delta. Again, as a swing trader, I'm at about 0.70. That's my comfort zone. So that being said, I hope you guys learned something today. As always, if you have other questions, don't hesitate to reach out. Follow me on YouTube, Facebook, Instagram, TikTok. I'm all over. Okay. Don't hesitate to reach out at all. And I definitely look forward to doing and continuing to do these trainings. So that being said, you guys have a great rest of your day. Bye-bye.